Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome back to the show, Danielle.
Hello, Jim.
Danielle, the federal budget is coming down next Tuesday. What do you expect to see, and what would you like to see?
Well, I think there's an awful lot of pressure on, with the housing market softening the way that it is in Canada, for them to don't just stand there, do something in terms of trying to stimulate demand again and to try and make it easier for people to get into first-time homes. And although that sounds like a laudable goal, perhaps, I think it's exactly the wrong thing to do at this time, because, you know, the debt numbers came out today again, Jim. Canadians' debt to disposable income, 174%. So, you know, I think only Australia at 199 is worse than us, and it's a crippling weight, and it is not going to be fixed by adding more debt. And it's interesting that in recent surveys, people have indicated that they are losing sleep. Their primary worry right now in Canada is the debt that they have and making sure that they pay their bills. And people are ranking that as more of a concern than health, more of a concern than divorce or marital issues or any of that stuff. So it's clearly hit the top rung in terms of ongoing trauma from the weight of the debt. But it's interesting that notwithstanding that, something like 62% of people who are already in debt say they expect to take on more in the next year with higher credit cards or lines of credit. The line of credit in particular seems to be the weapon of mass destruction, because as anyone who's managed their own credit knows, the problem with the line of credit is it can grow back every moment. You know, you can pay it down, and next thing you know, either an emergency comes up or someone asks you for something, and there's a response of wanting to get something without waiting, and all of a sudden the line of credit makes that possible. So people are having, you know, multiple mortgages these days and lines of credit. It's just it's gone beyond. It's crazy, and it's very unhealthy, not just for families, but for the country, for the resiliency in the economy. And what it's effectively done, as we've discussed before, is it reached into the future and pulled back a bunch of demand that we would normally get in due course over the next couple or 3 years, and in fact spent it over the last few years. So it just keeps leaving these potholes where there's not enough demand or strength in the economy, and then the go-to fix, of course, is to go back and add more debt. And that's really the self-destructive loop we're in. So I'm hoping that the finance minister doesn't succumb to the pressure and announce, you know, that they're going to, for example, go to these extended amortizations, this 30 and 40-year mortgage idea. This is a bad idea. All this does is mean people can be encumbered with debt that much longer, that it takes them you know, even more years to try and get the roof over their head paid for. And all that while, Jim, they're not saving for other goals. So we've got this massive deficit of savings in the country, not just in Canada, of course, but all over the world. But Canada really exemplifies this problem. And so, you know, we've got an aging population of people moving towards retirement without enough savings. We've got young people who are buried in debt, and they're just not able to step up and buy these properties off of the older people who are looking to downsize. And, you know, the way to fix that is really to repurpose some of the large superfluous structures into more multi-use dwellings, and also to allow prices to come down. It is not the fix to add more debt so a person can pay more. It's a fix to let prices come down so housing becomes more affordable. And I think that's the tricky bit politically, is of course that no one wants to go through the short-term pain to get the long-term gain. And yet if we don't, there's no way we're going to get out of this problem and get into a more productive climate.
Some of the banks have lowered their mortgage rates. Is that the way to make things more affordable?
Well, again, for the debt that people are presently carrying, if they could, have lower rates as a tool to help them accelerate their payments and pay back money that much faster, that's certainly something that can be beneficial. But unfortunately, the response is not to accelerate payments and pay back more quickly. Unfortunately, most people just end up taking on more debt and, continuing with minimum payments and that sort of thing. So, it's really, again, we've had this add debt and stir thing for 30 years. It's been the go-to policy all over the world, central banks and governments. And all through that time, rates were falling. But after people become so indebted that they can't move forward with their lives, literally, young people it's impacting a psyche of a whole generation, right? No longer are the next generation talking about they're focused on saving money. They're not talking about how to spend more, how to borrow more. They grew up in a period where debt was widely abused, and now everyone's paying the price, and they are really aware that they're very fragile and that they can't get a foothold in the job market because there's a lot of older people staying on longer because they can't afford to retire. So we've got a real tipping point, I think, here. And it's changing behavior, as I say, in young people. It's changing behavior in old people in staying in the workforce much longer. So the incentives should not be to force people to take more risk and gamble more, which is where we've been for the last few years. That's a very destructive path. We've seen that repeatedly. It shouldn't be about how to take more debt and how to gamble more. It should be helping people to restructure, to lower their costs, to get to a point where they can afford to live without having to abuse debt. And that is, I think, a trend that's going to happen naturally over time, both because of all the reasons I've just mentioned, because the population is aging and needs to, downsize assets, and because interest rates have been low and they aren't getting as much income off their savings that they do have. The whole thing about forcing inflation into the system, I think we're going into a period where it's all going to be about how do we be more efficient? How do we waste less? There's so many exciting technological developments coming along, both in the energy space, for example, where we can literally halve the cost if we move to more efficiency and a reduction of use and more electrification of the grid and that sort of thing. But also the things like 3D printing, Jim. 3D printing is mind-boggling. It's going to reduce so much waste, and it already is. People are, the medical profession is literally printing body parts, and tissue for the human body to heal itself. And all of this is done on site rather than having to be shipped, goods shipped from across the world. So this is all part of how we're going to get a more cost-effective living arrangement, and how costs are going to come in and how there's going to be less waste. That's all part of the solution. We need to focus on how do we do that rather than how do we keep asset prices unreasonably high and how do we add more debt to people. That's really run its course.
We'll have more with Danielle Park right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Danielle Park. Danielle, is one of the problems is that people are graduating with, $100,000 student loan debts. That's almost the amount of money their parents paid for a house. How do you start your career when you have that kind of a debt looming over you?
Yeah, so this is another hallmark of the era from which we've come, and that is that the whole education business, so to speak, has become intensely overvalued, overpriced, and the only way it was able to balloon to that size was, as I said, through this debt abuse that's gone on. So you have a lot of people who were reaching for this, thinking that it was necessary, and being told indeed it's necessary to get good work, but then coming out of the overpriced education system with a load of student debt to function, to pay, and then discovering that the job market is weak or there's not many openings because, as aforementioned, people are not retiring at the pace in which they're expected, and they're living longer. So, even if someone retires today at 65 or 70 years old, they have the prospect of living another 20 and 30 years. The incidence of 100-year-olds is absolutely exploding. So we have to get in our heads that we're going to be living much longer than previous generations, much longer than we may have factored into our financial plans. And this means that, as I said, we have to figure out how to lower the costs. We have to figure out how to get more lean and efficient. We have to figure out how people can get educated without having to, be debt slaves for 20 years and not participate in the economy because they're trying to pay off that balance. And, this whole scandal with the Ivy League schools and some people paying a fortune to broker people to commit fraud and get their kids into school on phony scholarships for athletics and all this stuff. It really just underlines how crazy it's all become, and this is part and parcel of I think of it as we've come through this period where merit has become almost defunct, and everything is done based on who can pay for what. And the only way that who can pay for what came about was because we allowed so much debt to come into the system, because we allowed central banks, for example, to grotesquely inflate the monetary system in the world, which basically benefited a small portion of the world who were the asset holders. And those asset holders now have ridiculous sums of money, which they've used to, and not everyone, but in a large amount, you see it in these scandals, that are all about buying influence and buying outcomes and, being able to buy whatever you want, basically, while everyone else is struggling just to get a chance or get a foothold. And this is, I think, a breaking point of this model, and that's a healthy thing because it has been a very destructive, dark time. And so I think it's great that all this is coming out into the news right now because it needs to. People need to understand how grotesque the system has become and how we've enabled it to become that way. And so, again, the greater light of day is shone on this, the more public abhorrence there is for the whole practices, the more likely we're going to see a tipping point, a change. And, I'm fairly optimistic because it simply can't go on the way it has. And, even with central banks now trying to come up with the next ideas for how to stimulate, you're dealing with a deflationary environment where credit is contracting just on its own weight. And again, with rates almost virtually low, $9 trillion of bonds in the world, Jim, are currently yielding negative to maturity, which means that the price, people are so desperate for income and they're so afraid of the asset bubbles in the world that capital is flowing into these things and pushing the price up so high that even if you hold to maturity, you're not going to see a gain, you're going to see a loss. Thankfully, we're not seeing that in North America yet, but you do have worrisome comments out of central bankers in the U.S. saying that they actually think it would be something they'd consider. Mario Draghi, last week at his, the head of the ECB, his press conference, he said the lunatic comment that negative rates have worked quite well. I mean, this is the sign of people who are completely out of touch with the deficits that have mounted all over the world, and the fact that they're basically powerless and are pushing on a string to try and offset the deflationary impact of the aging population, but also the debt, and the bringing forward. We're seeing car sales, for example, Jim, fall all over the world. In China, they fell to levels we haven't seen in decades. And typically, that's a major sector, that has been a major sector of the economy for the last, 100 years. And typically, each time you see a peak in that demand and a fall off, you're within, months or a couple of years of the peak of the cycle. We saw the peak of the auto sales in North America already, more than 2 years ago. So we're well into the period where that should be a harbinger of more weakness instead of a quick rebound. And again, all the tricky financing, all the easy pays, all the extending the amortizations on loans for 6, 7, 8, 9 years just means that people are still paying for the car they bought 4, 5, 6, and 7 years ago, and they aren't able to buy another one because they have too many loans on the go. So all of these things have really brought us to where we are right now.
We'll have more with Danielle Park right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Danielle Park. Danielle, I know we talked about the federal budget at the start of the show. If you were drawing up that document, what would you like to see in it?
Not more debt and stir. I would like to see investment. I would like to see investment in infrastructure, investment in longer-term goals than how do we get people to buy more house next quarter. We've had too much influence and dependence on investment in housing. We need to do investment in long-term ideas that are going to benefit our productivity over time. And certainly, financial gimmicks just actually are negative for productivity. So that goes to, the whole buying back of shares through corporations, artificially suppressing interest rates, negative interest rates, God forbid. This is all completely counterproductive towards our goal, which, as I say, is to improve efficiency in the economy. How do we get more for less? How do we manage our resources better so that we waste and cause less harm and instead, get more utility out of things? So anything that looks at how to improve our productivity and efficiency, incents better behavior about saving. I was thinking back to during the First World War, they brought out, victory bonds, and people were incented to help the country, in the war effort by buying bonds and collecting interest. And that interest was then, had a high probability of being paid. The principal was very secure, and the people were compounding interest in their savings. So they had an incentive to save, both for the greater good of the country, but also for the compound interest in their own bank account, in their own net worth. And those are the right incentives, right? Government should be giving people the opportunity to put their funds toward constructive projects that are going to help us long term and that are going to incent savings in the economy, not more futile consumption that people can't actually afford.
Some places now have made transit in their most densely populated areas free because they think moving people efficiently is the best thing to do instead of having traffic congestion? Is that something government should look at?
Oh, there's no question. Those are where government that is where our taxpayer dollars are best used, is how to make the system move with less friction cost, less pollution, right? Less air pollution, less harm to roads, less, having to rebuild bridges and asphalt and all that stuff. So taking traffic out of city cores, making it more conducive to people walking and public transit, whether, train systems and everything that can increase our efficiency and decrease the waste and harm that comes from moving people about is all going to be very productive. So definitely. And it's also investing in the health of the population that's really important, right? If we can incent people to move on their own locomotion, to, have an interest in looking after their health rather than just taking drugs, that all helps, because then we have much less burden on the healthcare system. And that's a huge amount of our taxpayer dollars going to sick care costs, as we've discussed before.
Almost sounds like it would be a good plan for government to pay for gym memberships. Or at least give you a tax break.
Well, we did have that for a while, right?
Yes.
There was a budget, I forget now, when my kids were little, I remember there was incentives I think it was $1,000 a year if you got your kids into active activities. All those type of things I would endorse much more than how do we get people to buy more cars, on longer terms that they can't really afford. Like, this whole consumption mentality has to be reviewed for what we can do that's more intelligent into our longer term productivity and health.
What about your own responsibility for looking after that? Have people kind of abandoned that idea we expect governments to do everything for ourselves?
I think that is a problem, yeah. I think it's a problem, but the answer is not that we don't need any government. Government is definitely part of the solution, but this sense of personal responsibility, I write quite a bit about all the horrendous financial scams that are around and all the bad advice people are given and how the banks are incented to sell people debt and how, sell them risk products for their savings. It's the exact opposite of what I was describing before, where, people should be incented to save and to keep their savings safe and to compound their interest and to grow it over time, all that kind of prudent behavior. Instead, we've got this fixation with things like casinos, which were illegal when we were kids in this part of the world, but have now become a mainstay. The whole lottery ticket scam, all the obsession with, scratch and win and how do I get quick bucks is really taking people off the plot of what they should be doing that's better for themselves and ultimately for the health of the country. And so, yes, all those incentives have gone the wrong way. Look, payday loans, that's another thing I've been writing about. We shouldn't even have these franchises, which have become a major business across the country, which has effectively skirted the criminal code, which always said that, we capped the amount of interest anyone can pay on a loan at 60% in the criminal code. That's horrendously high. That's twice what, the department store credit cards are charging, and yet we have people in Canada living paycheck to paycheck and having to go in and they're using payday loan franchises to get their money a few days early, and the interest rates that these companies are charging are more than 500% on an annualized basis. It's insane. 40% of the people who are going bankrupt in Canada right now have multiple amounts of these payday loans because they're impossible to get out of once you get started. So this is a type of business model that we should not even be allowing in Canada, but because the provinces were allowed, there was an amendment to the criminal code in 2006-7 where the provinces were allowed to take over regulation of this type of business. They've skirted that fundamental law about what kind of interest rates people can be charged. And yes, people are the masters of their own disaster because they lack personal discipline in many cases, or they are wasteful in their habits in many cases. But this is pure out, predatory business models, which this is where I think government needs to play a role in allowing. So we know that people tend to be self-destructive, but you have to put lines on the road in terms of what we're allowing predators to do or to give or to offer that's going to be self-destructive in the end. And, we do that with narcotics, for example. We do that with, opioids and things. Because why? Because people have a tendency to self-implode. We have to do this with financial products and very risky things and loans that are, toxic and you can't pay them back. And so, yes, people play a leading role, but we have to have better regulation, not necessarily tons of regulation, just really clear regulation and prosecution of offenders. And it has to be, it's not just the Ponzi operators out there that are giving, running fraudulent shops. You're never going to get rid of them altogether. You need to prosecute them to the full extent of the law. I'm more concerned, frankly, about the mainstream business, which is so full of conflicts of interest and has really lost all sort of responsibility for the harm they're wreaking in the economy and in households and, generally, in terms of our financial stability and social stability ultimately, because it is connected to the financial stability of the country. So, yeah, it's a complex web, and it's come from 30 years of allowing people to, cross lines that should not be crossed, to have conflicted business models, to, in this winner can take anything mentality, where there's such a great cost, and that cost has typically been left to taxpayers. And now the taxpayers of the world, of which we are them, are going to have a hard time, paying current and future responsibilities with all the weight of the payments. So it has to go back to a lot more, liability on people that offend, fines, clawbacks of profits, because too often people are breaching and causing great harm but keeping profits, or paying business fines, cost of business doing fines and continuing on. And, the snowball effect of all this is where we are today. So it's going to take some, fresh thinking and new approach to really just go back to many of the laws we've had in the past and how we used to enforce things. It's not really reinventing the wheel. It's kind of rediscovering what makes sense.
Well, we have a federal government now that has a deferred prosecution agreement thing that they brought into the criminal code. It seems like it's a get out of jail for free card.
Well, I'm a lawyer. I'm very in favor of due process. I'm very in favor of hearing evidence and having public exposure to everything so that it's out in the light of day. I hate things that are done, lobbyists behind closed doors, buying access, preferential treatment to the one group but not the other. I hate it because I know it is completely toxic to ideals of democracy and the rule of law. And, we got into this mess because for the last few decades we've gone towards that road. And it's got to a point where it's, well, everyone's doing it is the mentality. Well, so-and-so bought influence here and so-and-so, bought influence there. And it's a total mess. So, yeah, I think these deferred prosecution agreements should be very carefully vetted and rarely available, frankly. They should not be the matter of normal course, and it should be very much in the public in terms of what the facts are and who's speaking to who. This idea that CEOs can pick up the phone and call, into key members of the government who are there to represent the better, the general population, not just a couple of people. That sort of direct pipeline and expectation of favor has to stop. And we need to have a process so that they definitely should be able to voice their concerns or make their arguments for why they should have deferred prosecution or why they should have some particular outcome. But it certainly has to be only part of the process and part of the weighing of the evidence and all the other costs. The other costs, of course, being the complete breakdown of trust and ethics in the society, the financial carnage that's left for taxpayers to pay. This argument that we should be able to do anything as long as we provide jobs is ridiculous. Obviously, fair companies and honest players provide jobs just as well. And that if you take out the corrupt fractions and let people compete, this goes back to the whole merit-based society and letting people compete on an even platform. And anyone that's against that, frankly, we shouldn't tolerate them much anyway, because it's an embarrassing proposition in my view. So do we want to support a system where people can rig everything in their favor, and that necessarily makes us extremely fragile, and it's just not the way to go.
Well, I believe if they went and removed that legislation, it would be a great step in the right direction, wouldn't it?
Well, again, maybe not. It needs to be really looked at for what was the intention of it, in what case might it make sense. But again, that I think should be a public forum. It should be like a trial process. It should be part of a sentencing, perhaps, where there's an agreed statement of facts there, or an admission, or a conviction, or a guilty plea. But this idea that you should be able to plead guilty without admitting any fault, neither admitting nor denying this nonsense, this has been what we've had for the last 2 decades, and it became just from fringe to mainstream. And again, it's ludicrous, because then it looks as if the person didn't actually do anything wrong, and they start, justifying what they did, or it was small because they're back right, allowed to continue on. This whole thing, there must be admitting and, acceptance of responsibility, and there needs to be consequences.
Well, the Liberal government excuse for bringing in that law is that every other country has it.
Well, and that could be, but you see, the forces that I'm speaking of have not been just in Canada in the past 30 years. They've been worldwide. This is a system which has got really out of balance all over, and that's why we're seeing so much upheaval, so much unhappiness, so much frustration in the masses, so much lack of funding for things that matter, because there's so much waste going to things that are perpetrating a destructive status quo in many cases. And, part of that is because as people get older, they tend to be more in favor of the status quo, the things that worked when they were young and this sort of thing. And you've got the boomers with the bulk of the voting power. They tend to be voting much more than the young people right now. They tend to have, as I say, all the wealth and assets. The young people have the debt. But as this period moves forward, there's clearly got to be a rebalancing, both of assets, of wealth, of power, of jobs, and of agenda, quite honestly, because you can't have a young and robust up-and-coming population if you don't invest in them, invest in their health, invest in their education, invest in their ability to make a living, invest in ways to lower their costs so they don't need to spend as much. Those are all factors that need to be front and center.
Danielle, always fun chatting with you.
Thanks, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite. If you have any questions for Danielle or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.